From exposing Lewis's credit and insurance products to how Sovereign Foods executives have been paying themselves big, fat, juicy bonuses, minority shareholders have been cooking up a storm inside AGMs. This is the MoneyMakers. I'm Bruce Whitfield, and tonight I've got two of the most vocal shareholders that are trying to change the way the companies in which they invest operate from the inside. Joining us via Skype from Hilton in KwaZulu-Natal is Dave Woollam from Summit Financial Partners. He's wearing that hat this evening. In our Cape Town studios, activist shareholder Chris Logan, who has been actively trying to change the culture at Sovereign Foods. Let's start with you, Chris Logan, if we can. Let's talk about Sovereign Foods. Anne Crotty in the Sunday Times has been writing extensively about the remuneration policies of Sovereign Foods and how the executives in that particular company have been paying themselves a very big chunk of profits as salaries and bonuses. Just take me through it.
Yes, thanks a lot, Bruce. Well, Sovereign recently released annual results, and they benefited from the upturn in the chicken and poultry cycle. And they had good earnings, but it then transpired, once one had analyzed the numbers, that instead of earning something like R1.50, they only reported earnings of R1. And a sharp shareholder called Albie Salares then identified that most of the difference had gone on bonuses and incentive fees paid to the management in Exco. And this story then spread like wildfire, initially in a website called The Street, and it was then taken up by the mainstream media, being the Financial Mail, then Business Day, and then Anne Crotty in the Sunday Times. And to cut a long story short, we then went to the AGM in Uitenhage, and we managed to get quite a substantial vote against their remuneration policies. And not only that, the chairman agreed with basically everything we had to say. But of course, we've been left hanging. We haven't heard anything further, and the share price is suffering from all of this scandal, if you want to call it that.
But how in the 21st century and well into the 21st century do people believe they honestly can get away in an era of disclosure with that level of remuneration in a business that is a fraction the size and the fraction as efficient as, let's pick its biggest example, Astral Foods, which proportionately pays its executives considerably less?
Exactly, Bruce. You know, what has transpired since this furore has hit the media, we've now gone back and looked. Before Sovereign had to have 2 rescue rights issues in 2010, the CEO, CFO, and chairman were all earning substantially more than Astral in 2010, even though Astral was earning 35 times the profits. So it's actually clear there are deep-seated problems here, and they got away with it in this latest financial year by not being transparent and by changing policies without making required disclosures. So it's quite serious, and unless you almost conducted a forensic type audit, you wouldn't have picked this all up because it was clouded in mystique and lack of transparency.
But surely that comes down to a regulatory issue that the JSE should be intervening very aggressively on this, and that the other regulatory authorities, whether it be auditors' boards or whatever the case might be, should be held to account. The auditors certainly should be held to account on the basis of a lack of disclosure.
As I said, during the AGM, Albie Salares, the shareholder who initially broke this thing, accused the directors of material non-disclosure. And there is something in the JSE listing requirements that you have to disclose any changes. So it looks as if Sovereign may have fallen foul of these JSE listing requirements.
Let's talk to Dave Woollam very briefly now. Summit Financial Partners on the line just from Hilton on Skype this evening. Dave Woollam, we look at that particular example, and that is executives would appear taking advantage of their shareholders. The guys at Lewis might say they've been taking advantage of their customers for the benefit of their shareholders. It's a same sort of story with a different twist.
I think there are threads of similarity, which is really around accountability. I think what we found when we started to investigate Lewis was a high level of disinterest and almost total denial from management as to whether there were any issues. So we tried to engage with management. We tried to talk to the board, to the chairman of the audit committee. And it was quite puzzling to us that even though they may not agree with our views, they just weren't really interested in engaging with us. And especially at a non-executive level, I would have thought that if there's somebody who's done a lot of research into something in the company, that they would be at least interested in hearing it out. I think there are similarities with the story that you've just spoken about with Chris, in that the remuneration policies at Lewis were also shifted midstream. And in 2014, when they missed the targets, which were well publicized in the annual report, the directors, the REMCO, decided in their wisdom to waive those targets and to give full vesting to all the bonuses and the shares, which amounted to some 4 or 5 million rand for each of the CFO and CEO. And the excuse was that market conditions were tough and that executives were at risk of being poached, which is really a heads you win, tells you win type scenario, which I find very puzzling.
I mean, it is interesting, isn't it, when it goes into culture of organizations and the way in which organizations behave. I was chatting to the veteran journalist, the former managing director of Times Media, Stephen Mulholland, the other day, who was telling me 50 years ago as a young reporter, he was doing exposés on Lewis on precisely the same sort of stuff that you were talking about in the last couple of months. Maybe these things are inbred into companies and the culture is so entrenched that companies just don't see anything wrong with corporate behavior. And then when times turn tough, as they did, Dave Woollam, last year, then that's when the targets aren't met, and that's when practices become perhaps even more loose and easy.
I think that's right, Bruce. And for me, that's one of the critical responsibilities of the non-executive directors, who shouldn't be around for decades. They should be there for periods of tenure which are reasonable. And yes, cultures do get very entrenched in companies, and someone like Johan Enslen has been there since he left school. So in a way, he probably doesn't know any different, doesn't know any better. But that's the responsibility of the non-executives, to challenge and to question these issues. They should be taking an independent point of view and interrogating issues when they arise.
Chris Logan, when it comes to the board of Sovereign Foods, the role of non-executives when it comes to challenging remuneration as a percentage of profit of the company that the executives took away, what do the non-executives have to say about this at that very, very feisty AGM? Uitenhage has probably never seen anything like it.
Well, Bruce, they agreed with all our points, but what you've got to look through and see, the non-executives themselves are compromised, because although Sovereign's only 1/12 the size of Astral, they're earning non-executive fees far higher than Astral. And this has been the case for the last 5 years at least. So while they agree, everyone's conflicted. And it's quite hard to affect change, because the non-execs know they're earning more than they should. And the structure's sort of almost rotten from the top down.
So how then, as an activist shareholder, do you address this? Because if the regulatory wheels turn slowly, you can very well go and vote against a remuneration policy, but it doesn't mean that some clever remuneration consultant isn't hired to pull the wool over your eyes some other way next time round. So surely there's got to be more aggressive regulatory intervention on something like this.
You would think so. Well, you would think there's two ways of addressing it. First of all, via regulation, but then also by alerting the big shareholders that these actions are seriously compromising their clients' wealth, which is the case. And you've then got to try and win over the big shareholders to back a different course of action.
Who are the big institutions in Sovereign? So we're talking over each other a little bit here, Chris, but who are the big institutions in Sovereign? It's
the Prudential with 21%, and then it's the Mutual with 10%. And then there's Sanlam with about 10%, but Sanlam are definitely on side with what I'm saying.
But everyone's a loser in this, Chris
RACP.
Logan. Sorry, there's a slight delay on the line, but everyone's a loser in this, and surely it's in the best interests of shareholders. So we watch the space when it comes to activist shareholders raising the issue, as Chris Logan is doing with Sovereign Foods. Dave Woollam, when it comes to shareholder activists and shareholder activism, when you're dealing with a profit-generating machine that might be exploiting its customers, your approach has got to be somewhat different, I suppose, because you've got government regulators who frankly have been asleep at the wheel for a long time in terms of credit provision and the way in which policies have been sold alongside products and alongside the financial structures that accompany those products. You've probably got a little bit more muscle on your side when it comes to taking on Lewis.
Bruce, yes, I think to some extent we have, although it's been very difficult to get the regulators to really step up to deal with these issues we've raised. On the other hand, it's actually quite tough to get shareholders on your side because to some extent, they've been deluded or they've been sold into the idea that this is a highly profitable company. The share price was highly rated. At one point, the share price touched 100 Rand, which was on quite a high PE rating. And so when you go to shareholders and you tell them, look, there are things that are happening here that are wrong, that are exploitative, are affecting hundreds of thousands of consumers who are not equipped to handle or understand some of these illegitimate charges that have been raised. It's pretty tough to get them to then say, okay, well, let's back this, let's make these changes, and we will be happy to see the share price plummet. So it was very difficult when I was starting this process, trying to get shareholders on side. I will give credit to the PIC, who did come out quite strongly with a statement saying that they will ensure that the right things are done, and so be it. But I've been disappointed with some of the institutional shareholders who really have shown very little interest. And I will raise a point that there's all the asset managers sign up to a code called CRISA, and that code is around responsible investing principles, and it's supposed to ensure that asset managers take a real strong stewardship and custodian role, not just act as an agent. But I think in South Africa, we're just not seeing activism, being followed in any real sense, because I guess people rather vote with their feet and sell their shares or hang in where they are.
Dave Woollam, thank you, from Summit Financial Partners via Skype from Hilton, and also Chris Logan this evening, activist shareholder who has been stirring the pot, so to speak, at Sovereign Foods. He's been on the line to us from Cape Town tonight. Yep, it's all about vested interests. It's all about what you have to lose as the activists go in and make a fuss. Will the rows lead to a change in policy? Certainly over the long term, they probably will. In the short term, what are the hopes? Well, shareholders tend to play their cards close to their chests when it comes to contentious issues like these. There'll be more exposés and more issues from other money makers and people who are trying to get money makers to behave a bit more honestly next time. Good night. Until then, bye-bye.